Welcome into this video. My name is Money Coach Joe, and today I want to give you a rare insight into exactly what I invested my money in my six-figure portfolio for last month, which was the month of July 2024. Now, if you don't already subscribe to the channel, first of all, I'd massively appreciate it if you did, but also to your benefit, if you do, you will get a notification whenever I post one of these videos in the following months as well, so you can keep track of what's going on in my portfolio. On top of that, I share additional videos on how I'm managing and investing my money, essentially to show you guys that I'm practicing what I preach when it comes to good money management and investing, and ultimately to keep myself accountable to you guys, right? So that you are more encouraged to do the right thing for your own finances, to grow your wealth and achieve financial freedom. So in this video, I'm going to be running through this spreadsheet, this beautiful spreadsheet tracker that you see behind me, showing you exactly what I've been buying and selling throughout the month. So without further ado, let's dive in and get into it. All right, let's get into it. Just FYI, this is completely unscripted, so I apologize if I start rambling. I'm going to try and keep it succinct for you guys and robust to give you as much, clear-cut, good information on exactly what I've been buying and selling in my portfolio to help encourage you guys to build your own portfolios and show you how to manage and invest your own money to achieve financial freedom as well. So what we have here, first of all, is my position in my cryptocurrency portfolio. So last month, for the month of July, I added around £400 worth of Bitcoin to my account. You can see my position is tiny. I don't claim to have a whole bunch of money, but I am on the path to becoming a millionaire in my 30s and being financially free in my early 40s. And this is just through consistent long-term investing and building the portfolio you see in front of you today. Okay, so my Bitcoin position in relation to my entire portfolio, I have around 2.5% exposure to. So you can see the current value of my Bitcoin position is around $4,000. Something I'm aiming to get up to around 5% in my Bitcoin position. So something I'm continually investing in every single month. Next up, we have my pension, which is the equivalent of your 401k or IRA if you're in the US. So this was my workplace pension from when I worked my corporate role at my last job, and is now a SIP, which I invest into via my business that I own. Okay, so it's a massive tax hack. If you don't already do this and you're a business owner, you pay no tax on it, same as if you pay yourself a salary, right? It's a business expense. So I paid £600 into my pension from my business this month, which brings me up to around just over 5,500 shares of this particular fund. You can see this fund alone is worth over $100,000, around like £80,000-ish. And this fund is absolutely crushing it. You can see I'm up around 52% on this fund, and that's actually just since I transferred all of the funds I already own and had been accumulating over the previous 8-9 years in my workplace into the SIP. That's my gain since I transferred it over. My gain before that was something like 160% as well. So this average return of that specific fund in my pension, which by the way is the Scottish Equitables Technology ARC fund, if you're interested, the total annualized return of this fund is around like 34%, which is insane. But that's because it's a technology fund. It's extremely high risk. It's scored on a scale of 1 to 7 from low risk to high risk. And this scores a 7. But higher risk generally means higher reward. And because I'm investing for a multi-decade period, ultimately I kind of access this money until I'm 57 right now. So it's going to be in there for decades and decades and decades. Therefore, I can afford to take risk, and it's paying off massively. So after the pension fund, we then have my position in legal and general. And this is a UK finance and money management, pensions and insurance company, essentially like a multinational financial service that provides those kind of services in the UK specifically. They are paying around an 8.5% dividend right now. Obviously it varies, but their payout ratio is around 50 to 60%, which is insane. Like, this company isn't going anywhere, and if they're paying an 8% dividend pretty much guaranteed every year, then I'm going to load up on this. This is my key, essentially my only dividend position in my account, and it's one I plan to build to around 5% of my portfolio as a whole. Okay, so I think this one's a great one. I love the stock, I love the business, I love the dividend especially. Although I'm not a dividend investor, this the strategy behind buying this and adding this to my account was to add some diversification, right? I was essentially a very, very tech and AI heavy portfolio, which meant it was extremely volatile. I was okay with that when my strategy was a much longer time frame, when I was still working my job and was intending to be working my job into my 50s, right? Then through consistently taking action to improve our finances, improve our investments, starting my own business, etc., I got myself into a position where I was increased my earning potential massively. My actual earnings increased drastically, and then I was in a position where actually I could invest enough to retire a lot earlier. So that meant my timeline reduced to retirement, which meant I didn't need to take as much risk exposure with my portfolio, which meant I started moving out of some of the more riskier positions, like the much younger stocks that were very, very much up and down, swings of like 50-60% in either direction, to positions in ETFs and positions like Legal & General. I still hold many of the good tech stocks which have done very well, and the finance stocks or fintech stocks which have done very, very well. But those riskier positions are ones I've moved out of to both concentrate my portfolio from the 25 plus positions I had down to around 15 positions, as well as into more kind of foundational positions like my ETFs and Legal & General. So after Legal & General, you can see, well, in this month, I added 39 shares to that position. It's something I've been building up a lot. You can see I'm around 219 shares at the moment, only around 0.5% of my total portfolio. And like I said, something I'm aiming to build up to more around 5% of my portfolio as a whole. Then we have my key ETF positions, so two of them anyway, which are GGRG, which is the Global Dividend Growth ETF. Now, don't be fooled by the name. It doesn't pay a dividend. It invests in quality global dividend stocks like, Johnson & Johnson, Microsoft, things of the like, right? But rather than paying out the dividend, which isn't efficient, they reinvest the dividend automatically to concentrate on the growth of the fund, which is what I'm interested in. I'm interested in long-term price appreciation of the fund and growth so that it grows fast so that I can hit my retirement goals sooner. And these are held, I should say, in my ISA. So you've got my Bitcoin position, which is in my crypto account, my pension, which is in my SIP, and everything else after this is held in my ISA, unless I say otherwise. So that's my first key ETF position, which is in the Global Dividend Growth ETF. Next, we have VUAG, which is the S&P 500 ETF. And again, this is the version of the ETF which does not pay out the dividend. It reinvests it because that's my strategy. It's what I want out of this position. I don't want the dividend right now. I want them to reinvest it to, to multiply my growth potential in this fund, essentially. So I added 3 shares of this to my accounts. I'm currently holding around 64 shares for a grand total of around $6,000 worth of that particular fund in my portfolio. After that, it's a bunch of individual purchases in companies like CrowdStrike. So I bought 2 shares of this. I actually sold or trimmed a couple of my positions, which I'll show you a bit later on when I get to the next slide, in order to add to CrowdStrike midway through the month when they suffered that huge dip. So they're still, tech generally is in a correction, and some of that has been driven by the CrowdStrike situation where they had essentially a malfunction go off in the an update that they sent, which resulted in the stock price going down. Now this company is still incredible. If you look at the fundamentals of this business, they are not going anywhere anytime soon. They are a market leader. They are the number 1 in this industry, and they are going to continue to keep crushing it. Yes, the share price has been hurt. If you look over at the 1-year chart over here, you can see they're on an absolute rampage, and they've fallen around, I think it's around 15 to 20% at the moment. I haven't checked the exact numbers, but that's because I'm not overly worried, right? I'm not particularly concerned about what it's doing in the short term. If this was a security breach and they had actually been hurt, right? They had actually been, their security technology, their software had been breached by a cybersecurity attack or something like that, then this would be devastating for the company, and I would probably be selling it, okay? Because it shows that the service, the product they're offering is not actually that good. But because that's not the case, and it was just a simple, mishap essentially and some coding. They've put some they've put some processes in place now to stop that happening again, and it means I'm more than happy to continue holding this stock. And because I'm a long-term investor and I'm not planning to sell this position for another 10, 15 years until I start making a steady drawdown on my entire portfolio, I can afford to buy more now at a lower price, which is why I trimmed some of my other positions, which I'll tell you about in just a little bit. Then there was the position in DigitalOcean, which I added 2 shares to. Again, this one's just had a bit of a rough time of it lately, so it seemed like a good time to add a bit more to this stock. Then we have more kind of individual or like 1 or 2 share purchases in positions like Micron Technology and my other core ETF, which is the NASDAQ fund. Now, the reason I haven't bought as many shares of this one as I have of the other ones is simply down to the price per share. So adding 1 share has a much bigger impact to my exposure than buying the other ETFs in the portfolio, right? Because they are cheaper per share. So I bought more of my NASDAQ ETF. I added 1 position to this in the month of July, bringing my total to 14, which brings it up to around the equivalent of my S&P 500 ETF, so around $6,500 worth of that fund there as well. I also added to a few other individual stocks, such as Tesla. Again, they've had a bit of a rough time of it in the last year or so, so it seemed like an absolutely no-brainer opportunity to continue buying at what I feel is a very, very low price. When you consider what's ahead in the road for Tesla, pun intended, it's unbelievable. Everyone looks at them as a car company, and when earnings come out, everyone is looking at delivery numbers. Understandable in the short term as a trader, because that's what is driving the stock and also what is essentially the key performance indicator of whether the company is doing well or not, because that's their main product, right? It's where they're getting most of their money from. However, they are an AI company. They are a software company. They are an autonomous driving software company. They are a solar company. They are an autonomous robot company eventually as well, right? The opportunity ahead for this one is unbelievable, and being able to buy this right now at $220 a share is an unbelievable opportunity that many people, I believe, will look back on and regret not buying more. So I am adding to this position right now at these prices every single month. I hope it stays at this price for as long as possible so I can capitalize on it, because as soon as they go to market with their autonomous robots, their autonomous taxi networks, and so on and so forth, it's going to be game over for their competitors. They are going to absolutely wipe the floor with everyone. So that's my feelings on Tesla. Bullish, as you can hear. I also added to my position in AMD. Understandably so. They've just released great earnings as well, so very, very bullish on that one. Also added to my position in the Trade Desk and Datadog as well. In addition to that, there are all the positions that I didn't add to, right? Now, I've left them out because this video is covering what I did buy and what I did sell, not what I just held. If you want to see the entire spreadsheet in its full glory, then I will leave a link below where you can join my private stock group, the Savvy Investing Club. Now, inside that group, you are also going to get access to my real-time buy and sell alert. So anytime I buy and sell anything, you are going to get alerted to that in real time so that you can copy along if you wanted to. You're also going to get access to this full spreadsheet 24 hours a day. In addition to that, I post a full portfolio rundown market analysis every single week, sharing my thoughts on the previous week, my market analysis, what moved the markets in the previous week, and my plans for the week ahead based on what's going on, whether there's earnings, Fed announcements, whatever it is. So you essentially to help people gauge how they should be running and operating their own portfolio by seeing how I operate mine, and mine has been very, very successful. So those are all the positions I didn't add to or didn't sell. Finally, we have the positions that I either sold completely or trimmed. Now, I'm just going to go ahead and delete this so you can see everything on here and then explain. So both Mercado Libre and Apple were 2 positions you can see that I just trimmed slightly. So I sold 1 share of Apple and 0.1 of a share of Mercado Libre so that I had capital to buy more of CrowdStrike when it sank 15% after that glitch with their software. Now, in addition to this, I actually sold my positions in United Health and Danaher. And this is because those two positions, United Health and Danaher, were dividend stocks, essentially, as I saw them, long-term dividend growth stocks. And because I'm now moving to a strategy to condense my portfolio to hold fewer positions that make more sense, that are more aligned with my strategy, I've bought the GGRG Global Dividend Growth ETF that I mentioned earlier. So I moved all of the capital that I had in Danaher and United Health into that ETF. So that is everything that I bought and sold in July. Now, if you've found this video helpful, I'd massively appreciate it if you could smash the thumbs up button. If you'd also like a copy of this tracker to track your own portfolio, then like I said, you get access to that in the stock group, and you can make a copy of this and start using it to track your own portfolio as well. I'll also leave a link to Snowball, which I use to track my portfolio performance as a whole across all of my accounts. Now, I use Snowball because before Snowball, I was having to use this spreadsheet to try and work out what my 1 year, 2 year, 3 year, 5 year performance was versus things like the S&P 500 or the NASDAQ, to see how I was performing, to see if it was worth me even buying these individual stocks and putting all this time into the research versus just sticking it into ETFs. It became pretty much impossible to track what the performance of all of my positions in my ISA, all of the positions in my self-invested personal pension, as well as my positions in my crypto account and my head and over account, and et cetera, et cetera. I essentially had 4 or 5 different platforms that I was using to invest in stocks or alternative assets. Oh, and also Masterworks as well, which I use to invest in art. So that's 5 platforms that I was using to invest in different assets, essentially. And then that became an absolute nightmare to see how I was performing as a whole. So I started using Snowball because I can track each of those individual portfolios, but it also has a snapshot of everything collected together to show me my performance, and I can measure that performance against things like the S&P 500 or the NASDAQ and so on and so forth. So I'll leave a link below. There's also a discount and a free trial associated with that link, so you can join that. But the first link is going to be the link to join my Savvy Investing Club, where you can get access to my entire portfolio, copy along if you want to. I'll post all of my stock research and analysis, as well as that weekly rundown I mentioned to you. Now, if you found this valuable, I'd massively appreciate it if you could smash the thumbs up button. It helps me in the algorithm. Like I said, I post one of these videos every single month, along with videos on how I manage and invest my money elsewhere and track just my month-to-month finances and my net worth and so on and so forth. So if that's something that's of interest to you, then make sure you subscribe so you don't miss a future update. Take care, and I'll see you in the next one.